And we are live right there.
Wow. I mean, that right there just made me want to dance.
I don't know about dancing, but you are going to get excited. Not so much about the inventory, but maybe about the interest rates. The one good thing is if you've been watching us every week, we've been having less and less inventory hitting the market on a weekly basis. It's been a consistent theme. We need more inventory. Well, nothing's truly changed, yet it hasn't got drastically worse.
The only thing that's constant is change, though. We know this.
Yeah, that is true. So inventory is fairly consistent, right? With the active properties, 2,300, 3,200. You can see the numbers right here. In the attached market, it's a little bit closer, to where it is, but you can kind of see those numbers separated a little bit too. And over the past couple of months, I was saying, hey, that's a market you can still buy right there. It's not going to be as affected. Really look into it. Well, it looks like that separation is happening in the attached market. So we'll see as things progress what happened. It's really now about, looking at coming soons. Maybe having your realtor reach out to other realtors where properties might be hitting the market in the near future. I don't know. Our team, always prospects, and so we're trying to find off-market opportunities. Just trying to find any single avenue you can for properties out there. And I believe that we're gonna have a lot more properties in the market as soon as COVID starts dying down. So don't kick yourself if you're not finding a property now. There's going to be other opportunities coming about. The question is going to be what's going to happen with the rates, and that's where David jumps in.
Well, it's interesting that you mentioned that, because I was doing some updates earlier today, and I'm going to mention some of this because it's kind of an important financial information. So we had things come out today. You had what's called the freight index, which shows you, how much does it cost to ship things? How much is the cost of goods going to be because of shipping? That has gone up from 5% to 13%. The other thing, when you look at that, is retail sales are down. So both of that points as far as things getting more and more expensive. So what that tells you is the Fed really is going to want to keep rates lower because of costs going up. That's inflation. And also, if you guys looked at some of the new news that's coming out, there's a lot of COVID relief coming out and raising minimum wage to $15 an hour. So with raising minimum wage to $15 an hour and with all the COVID relief that's going to come out between now and all the way to September, it's going to end up being billions of dollars. You really can't increase rates. You can't do that unless you really want to destroy the economy. So what does that mean? To sum it up with my long kind of story with maybe too much details, is rates should stay very similar to where they are or go up 1/8% between now and September. So you have a long window. You basically have, 7 months of really good times, and then you may get more of a shift as we head into, fall and winter. But overall, it's like a lot of the bond auctions going on right now, they're not going the way they're supposed to because everyone's anticipating inflation to, keep pushing up. So, a lot of advice for those of you out there shopping, make sure you talk to a lender that's actually watching financial data, watching the bond auctions, watching the important economic events that come out, because volatility right now is very high. It's going like this week. We started out at jumbos 2.625. Yeah, we ended this week at 2.875. That's 1/4% difference. That's huge, for all those buyers with all those $1 million listings, Vinny. I know that's
if you're looking to sell in the next 2 years, I would say seriously look at selling today. If you're looking to sell in the next couple of years, look at selling today and maybe rent for the time being.
Wow,
right?
that's a bold statement right there.
Yeah. Oh, there you go. We got Brad giving you a little thumbs up.
Well, it's you look at all the economic data, and you will decimate the economy if the Fed raises rates. And I'm going to tell you, with the new administration taking over, I don't think they want to destroy them own selves in the first 7 months. But I will say you can plan on a lot of more taxes and a lot more spending. And that goes to devaluation of the dollar as well, which now, Vinny, is going to bring you to why I'm mentioning all this. Inflation and devaluing the dollar and spending means hard assets worth a lot of money. Real estate is a hard asset. This year, real estate is going to be super valuable. And I mean more valuable than a lot of other times, because spending devalues the money. Hard assets are worth money. So invest in real estate, invest in gold, and if you can buy Bitcoin, buy a little bit.
Yeah, Bitcoin has
a little bit. That's what I bought.
Again, focus on the now and be careful with the speculation. Again, our economy has always gone up and it always goes down and it always goes back up. So we are waiting for the market to drop. I mean, the market, based on all indicators, should be dropping. Yet things have changed. Rates have drastic lows. You know, we had COVID where people were afraid to put their property in the market, so we had less inventory in the market. I mean, there's a lot of things that have helped the market stay up and go up, right? Yet the market is going to go down. I mean, it's going to go down. It's not a matter of if, it's a matter of when.
I agree with you, Vinnie, 100%.
So if you're speculating to buy the property today, right, or your realtor or whoever you're working with is saying, hey, buy the property today because it's going to worth 15%, 10%, 20% more in the next year, 2 years, you might want to start talking to a different lender or realtor, right? Focus on the monthly payment, focus on the now, you know, because that's what you should worry about. And if you're going to be buying a property to live in for the next 10, 15 years, there's not going to be a problem. Even if the market goes down, it doesn't matter. It's all about basically that monthly payment. So don't do an adjustable, do a 30-year fix, focus on basically the long haul. And hey, if the value goes up, the value goes up. But if it goes down, at least you're protected.
And you know what? You're going to take a couple steps back and look at something 2 to 3 years from now. The rates you lock in today, for those of you who are smart enough to refinance, and for those of you who take advantage of the low rates right now, 2 to 3 years from now, you will look back and brag to all your friends, hey, look how low my rate is, because it's going to be untouchable. If the rates get lower, by a half a basis point, you have more things to worry about than your mortgage, because that means we have massive problems, which I hope we do not get. So
if you're looking to take advantage of the market right now, right, follow our investor seminar in 20 minutes at 4:30. Okay, if you're watching this live in 20 minutes, we're going to be doing an investment seminar. Follow us, listen to us. We're going to walk through the process of how you can purchase now, take advantage of the market, right? Because there is still the ability to take advantage of the market, right? So join us at 4:30. If you can't make it, don't worry about it. We'll have the video of it. But join us, follow us every Monday and Friday at 4 o'clock. We'd love to be your trusted resource for all your real estate needs.
Thanks, everyone.
Thank you, guys. See you soon.